Good morning, everyone, and welcome to Shield. Today is our first live broadcast, and I'm quite excited and a little bit nervous at the same time. So I hope that it will be an interactive and valuable session for everyone joining us today. Our guest today will be Mark Bamber, who will give us a summary overview of grants available to businesses in Malta and Gozo and insights into financial planning, specifically scenario forecasting and liquidity challenges and management. Mark has served as a KPMG partner in Malta and as a CFO and advisor to Malta's first challenger bank. And in over 20 years in his career, he has advised numerous businesses ranging from startups to large multinational corporates across different areas such as organizational management, financial planning, consultancy, and so on. So I would like very much to encourage you, in order to get the most value out of this, to interact with us via questions that you can type in through Facebook comments or YouTube comments. So without any further ado, I would like to introduce you to Mark. Mark, welcome.
Good morning, everyone. Fran, thank you for hosting this session. I think I will try to limit this part of the session to around 30 minutes. And I aim to be as informative and relevant to the needs of our audience as possible. In reality, COVID-19 has been a transformative event. The health implications are enormous. More than 257,000 dead people across the world and 3.6 million sick people. The numbers are staggering. The health implications are also complemented by a major economic shock. What we have in our lifetime is an economy that relies on the circular flow of money. I earn money, I spend money, that money is income for other people, those people have income, they spend money, and it's a chain that goes across the entire economy. Malta is a small, open economy, actually, and it has endured a major impact, both on a health basis. Obviously, it's a small country, it's an open economy. We rely a lot on planes flying in, and that is how COVID-19 came to Malta. The Maltese economy also is small and open, and the economic problems also came to Malta. I cannot remember a time in my lifetime where there were no tourists. I cannot remember a time in my lifetime when retail was in its current state, with people perhaps being afraid of going to a shop. I cannot remember a time in my lifetime when it was prohibited to meet and enjoy a cup of coffee with a few friends. This is the reality we are living in today. A lot of businesses are facing a restricted marketplace or restrictions on their ability to operate, or being forced to go into a sort of lockdown or partial lockdown because of the health regulations. Clearly, these are extraordinary circumstances and necessitate extraordinary measures of support. I wish to give you a brief overview of the new and emerging measures of support for businesses in Malta. Firstly, I need to note that this is a changing scenario. New and emerging measures of support can be edited, can be updated, and new measures can be issued from one day to another. But I hope that this brief presentation will be of interest to you and will trigger some questions, because to be honest, I much prefer to have an interactive session rather than listen to myself just speaking. Essentially, I see the measures of support that are available to break down into three categories. There are obviously measures to do with the protection of employment, there are measures to do with support to working capital of businesses, and there are measures to do with financing. In terms of the protection of employment, well, we're all aware probably of the wage supplement mechanism issued by government. Government has identified two major sectors. It has identified a group of enterprises and sectors drastically impacted by COVID-19, and it has identified other enterprises in sectors that were just affected by COVID-19. The first sector comprises most of the tourism industry, the travel operators, the accommodation, the food services, retail trades, etc. The second sector, which is just affected by COVID-19, comprises manufacturing, warehousing, certain wholesale, and other services. But the wage supplement is essentially a measure aimed to protect employment and to support the income of people, including self-employed people. So, in the sectors drastically impacted by COVID-19, government has issued a monthly wage support of €800 for full-time employees and €500 for part-time employees. In the sectors affected by COVID-19, which are less than drastically affected, it's a bit more complex. Government differentiates between Malta-based businesses and Gozo-based businesses, obviously to encourage investment in Gozo. And there are sliding scales of assistance available to employees depending on whether they are full-time or part-time, depending on whether the business is based in Malta or otherwise. But these are collectively a wage supplement to protect the income of people and to support them, to enable people to have money still flowing.
And to basically, help businesses retain the staff that they have operating in the sectors to ease then the transition to, some form of normalcy, because I don't believe we'll, go back very soon to how we used to know the world. So there is a transition, to happen, but it's trying to achieve a balance, if you will, between the current status and the optimism that follows in things picking up again.
Yes, that is a very relevant point. I believe that government has already made clear that these employment measures will continue to be sustained for some time, although there has not been a definition of a timeline. But these measures will continue to be sustained for some time because it is acknowledged that the resurgence of economic activity will be a slow and gradual process.
Absolutely. And just to clarify, Mark, and sorry to interrupt there, the employment measures for the employers that avail themselves of it to sustain their workforce, they don't need to refund these supplements.
No, correct. You are correct in your interpretation. The objective of the wage support scheme the objective of the wage support scheme is really to support income, to enable employers to keep employees in employment, and in reality to encourage employers not to dismiss their employees, because obviously there is the inevitable probability that we will emerge from the situation. But apart from wage support, in terms of employment measures, I also want to highlight a separate scheme, which is the facilitation of teleworking. Government has a scheme to incentivize businesses to invest in teleworking for employees. It's targeted at all businesses and all self-employed individuals, subject to some conditions, obviously. And there is a budget of €2 million to finance these support measures. It's meant to assist businesses to invest in setting up teleworking facilities and to adopt teleworking technology so that increasingly businesses can make the transition to online and teleworking ways of operations.
Excellent. And of course, this will assist the businesses that have the capacity, depending on the sector that they operate in, to shift their operations remotely without incurring, a high fixed cost in the initial setup phases.
Very good. A second category of COVID support is working capital support. And there is a scheme which is based on loans from commercial banks, and the volume of financing underlying the scheme amounts to 778 million euros. This is a scheme that is aimed at all companies operating in Malta, whether or not they are small and medium-sized enterprises or whether they are larger enterprises. It's a scheme meant to enable loans to be extended to companies in order to support the payment of salaries, payment of lease payments, payment for material, stock costs, working capital creditor balances, investor credit balances, any costs incurred as a result of contracts cancelled or delayed by the pandemic. And it takes the form of loans to the company being assisted. Loans could be for a minimum of 18 months to a maximum of 78 months. And these loans can even be subject to a moratorium of between 6 and 12 months. And interestingly, here the interest rate is moderate, and there is an interest rate subsidy mechanism that will effectively bring down the cost of credit to a very low, an extremely low and affordable level. So there is a scheme that is there intended to support working capital. It is the credit is available, the credit is affordable. The scheme is meant to support most of the working capital needs of businesses, and it is a very good scheme with a very strong amount of financing underlying it. Speaking about the third category, there is also a scheme meant to support financing, and the purpose of this scheme is to support vulnerable persons who have been impacted by COVID-19. The difference of what I'm going to speak about as compared to the working capital scheme that I've just mentioned is that the working capital scheme is about extending new loans to support businesses during COVID-19. The financing scheme is about existing loans that had been sanctioned prior to the 1st of March of 2020. The financing scheme is offered to all persons, so whether this is about SMEs, whether it is about legal persons, hence companies or other forms of businesses, or individuals. It could be individuals who have committed to a house loan or any other form of mortgage and now find themselves in difficulty to finance that loan. The nature of the scheme really is that applicants can apply for a full moratorium on capital and interest, or to restrict the moratorium solely to the repayment of capital. Effectively, the moratorium can be for a period of 6 months that can be extended to 12 months. And what will happen is that the loan periods will be extended by the period of the moratorium after the expiry of the term of the loan. So there is a scheme to support working capital if there are working capital requirements, and that scheme will take the form of new loans. There is a scheme to support the financing of businesses or of individuals in the case of existing loans. In general, the impact of the support schemes is that, in summary, I would argue it is easier to access financing under these schemes, and the financing that can be accessed is more affordable. So there is more bank liquidity, there are lower borrower collateral requirements that are going to be required by the banks, so the access to financing is easier. In terms of affordability, the interest rate subsidy reduces the cost of credit to a very affordable level, and The moratorium on repayments is a form of support to the cash flows of businesses that are going down the route of these support schemes.
Absolutely. And I think it's worth, emphasizing here, especially with regards to whether businesses or individuals apply for a moratorium with a bank, is that, the moratorium is added for the duration of the loan rather, than being required to be paid as soon as the moratorium expires. So it allows the borrower to spread the payments throughout, various timelines that doesn't impact them drastically once the moratorium period comes to an end for them.
Absolutely. Now, of course, I also want to mention that there are other support measures to which companies are eligible. Because the truth is that the COVID-19 pandemic hit Malta at a time when there was already a package of support measures available on the market that predates the pandemic. Of course, these schemes of support are still available today, and I don't wish to focus you only on the new schemes because there are other support measures that could be interesting, like, just to mention a few examples, the consultancy services grant, which can finance up to 80% of the fees of consultants that can help applicants to apply for support and to build up their planning and their business case for support. The Microinvest grant, which is meant to assist and support companies that are making investments in their future. The e-commerce grant could be particularly appropriate to these days. The e-commerce grant is a grant scheme to support companies as they extend their operations into online sales or online operations. And of course, there is the Maternity Trust Fund that covers the cost of wages and salaries paid to female employees who may be on maternity leave during these days. The point I wish to make here is that there is a vast plethora of support schemes. It's impossible for me to go over all the support schemes that are available to businesses in the space of a 30-minute time frame. But there are a large number of different support schemes that can assist in different circumstances. There is no prohibition or there is no exclusivity of support measures. So a company can benefit from support under different measures. And in fact, under practical circumstances, what would make most sense would be for a company to think about its requirements and identify a plan going forward, identifying also which of the specific support schemes could be of relevance to the implementation of that plan.
I mean, that's the fact that they can combine different measures, whether COVID-related or pre-COVID, gives companies the benefit of positioning themselves in such a way that they can, hopefully withstand adverse effects that are induced onto their business by the pandemic, and not only because when situations like this happen, such as COVID-19, the consumer behavior also shifts in patterns. So, like for example, in Malta, as of Monday, the non-essential shops have reopened, but there are still a large number of people who may be reluctant to physically go into the shops. So we have on one side the fact that the measures have been relaxed for non-essential shops, but then on the other side we have the consumer behavior whose perception may have been affected by circumstances. So a business availing themselves, for example, of the e-commerce grant, for example, can still think long term onto that area and future proof to some extent their business until the consumer behavior renormalizes itself, I guess.
Yes, in fact, Fran, if you'll allow me, I'd like to take this discussion outside of what are the support measures available and take it into the broader issue of we are living in a time of an economic shock. A lot of businesses have been very badly affected. A lot of businesses have been hit. What am I advocating should be done? And for a moment, I am saying just forget about support measures. What every business should have been doing is taking stock of the realities of the market and the business. To my mind, every business should have been thinking about its own marketplace, about its customers, what new trends are emerging during the time of COVID-19, what are the possible trends that can be emerging during an eventual recovery out of COVID-19, and consequently considering what are the implications for the business. The starting point should not be what assistance is available. The starting point should be what is the likely future scenario and what are the implications of that future scenario. Is the business going to be able to continue to meet payroll obligations? Is the business anticipating potential problems with customer payments? Has the collection of payments slowed in the past days? Can the business afford to pay suppliers? Are suppliers demanding immediate payment during these difficult economic conditions? Are there adjustments that need to be made? By adjustments, I mean, is there the need to cut expenses? What are the possibilities of cut expenses? The practice that I believe in, that is normal financial administration, and that is good practice for any business, is cash management and cash planning. Liquidity management is about considering the current situation, the likely future scenario or scenarios, and what are the implications from financial management perspective of those future scenarios. What do I mean by scenarios? We are living in a time of uncertainty. Doubtlessly, any business that stops to consider the current reality and what that can mean in the future is going to end up with an endless list of question marks. Yes, each business can come up with its more likely expectation of a future scenario. But scenario building is about acknowledging the possibilities that things may work out differently. So I would always advise a business when looking at a future possibility to think in terms of what is an optimistic outcome, what is a likely outcome, what is an adverse outcome. If the likely outcome does not happen and things are worse than you have been expecting, what could that scenario be like? Under every one of those scenarios, then, the business can stop to ask itself the critical questions. A tool that I have found very useful in my career is what I tend to call the run rate file, which is really a simple spreadsheet based on dynamic cash flow forecasting that in reality, it is simply starting by documenting cash on hand at the moment, projecting receipts for upcoming periods, and I generally tend to look at weekly periods to be able to do detailed short-term cash flow projections, estimate cash outflows during the upcoming periods, which is the other side of the coin, look at whether there are operational or non-operational payments that are going to be incurred during the upcoming periods, look at people obligations. People obligations could be payroll, could be benefits, could be taxes, could be fringe benefits, look at financing or other payments, and on a weekly basis in my tool, I look at what is the cash situation. In reality, this sort of simple spreadsheet can be modified to show the different implications of different scenarios. And in reality, this basic tool is an important groundwork for the identification of under which scenarios and which problems are likely to emerge. It is in that knowledge then that a company can stop to think in terms of support measures, because the application for support measures is going to necessitate that the starting point for that application has been the company's own planning and the company's own analysis as to what are the likely future scenarios and the likely future problems. Having identified the likely future scenarios and likely future problems, one can then sit down and consider what are the different support measures available that would be able to intervene to assist the company in addressing those problems.
And Mark, you've mentioned that this very simple tool of cash flow management on a weekly basis. Whereas a lot of businesses have that on a monthly, for example, or quarterly basis. Why is it important for businesses to look at the weekly cash flow and liquidity measures?
I would argue that looking at cash flows on a quarterly basis is an appropriate approach if one is looking at medium to long-term cash forecasting. If one is operating in an environment of uncertainty, as we are at the moment, and if one is looking at short-term forecasts and results, I believe that a weekly basis of cash flow forecasting is more appropriate and has more potential to identify the likely timing of problems if problems are likely to arise in the near future. Also, a cash flow forecasting tool should be used for what-if planning. What-if planning is the variation of scenarios to think of what if an alternative development in this scenario can emerge. I would argue that short-term forecasting is more appropriate than medium to long-term forecasting in the current context.
Excellent. Thank you, Mark. And for businesses that do not have an in-house, for example, finance professional, whether a CFO or a financial controller, what would be their options in this situation?
Well, I would suggest that the two options available are, well, a business can reach out to the institutions, a business can reach out to the banker, a business can reach out to Malta Enterprise directly and put things together through interaction with the institutions, or a business can speak to a business consultant who is actually working with these institutions and is familiar with the application process, the assistance available, etc. And that consultant can guide the business in terms of what it needs to do and how it needs to go about the process.
Excellent. And just to remind the viewers that there is the consultancy grant available should a business wish to go down that route, where 80% of the consultancy cost will be then given back to the business in the form of a grant to help them make the most out of this during these challenging times. And another point that I would like to raise, Mark, is with regards to liquidity management, because in these situations, a lot of businesses are struggling to meet their payment demands by creditors and vice versa. So it tends to become a vicious circle. Payments get delayed, then you delay your supplies, and so on and so forth. What sort of advice do you have for businesses finding themselves in a very tight position when it comes to collecting, but also paying out money that they owe?
Well, liquidity management is about planning the timing of cash inflows and cash outflows. I appreciate that at the moment, The cash flow situation in Malta has been very badly disrupted. I know that a lot of companies are facing problems, but in reality, what I would suggest is that it is always good practice to speak to creditors. It's always good practice to meet up and speak to creditors if you anticipate that you need to reschedule the repayment of creditor balances. I know that sometimes one finds the upsetting circumstance of companies that simply do not make their payments. It is a lot more courteous, it is a lot more friendly, it is a lot easier to enable planning if a company were to meet up with a creditor and say, I have particular circumstances. Everybody is going to understand that at the moment, every company in Malta is facing particular circumstances, and with particular circumstances, everybody is going to be aware of the circumstances. It is possible that one can manage to renegotiate the timing of cash flows with creditors. It is alternatively possible that one can apply to the working capital support measure to obtain liquidity in order to be able to make the payments to certain creditors when and how they fall due. So there are various solutions from a liquidity management perspective. I would argue that simply not making a payment is not an ideal solution.
Understood. And Mark, throughout your career, you've, worked with and advised and mentored, finance professionals, CEOs, board members, and so on and so forth. What would be your professional advice, especially for CFOs or financial controllers, for example, that are probably under a lot of pressure, to say the least, right now in the businesses that they work? What insights or tips you can give them that will help them assist the board, for example, or the company owners during these difficult times?
Develop your tools, do your planning, try to identify as far as possible when and how big the problems that are going to arise are going to be, and prepare, start speaking to your clients, start speaking to your directors, start speaking to your managers, make them aware of what you are anticipating, and start proposing solutions or potential solutions to them.
Excellent. And for, business owners, because, sometimes you're very close to a situation where it's, difficult to see, for what it is. You may feel that, your CFO is coming to you with a plan and you're thinking, no, we are in the middle of a crisis, leave me alone. We need to sort, bits and bobs, probably things that are coming in urgently, which is unfortunately, but at the same time, quite a natural behavior in times of crisis. I'm going to take a wild guess here that probably, the advice would be the same, to take a step back and analyze the situation and work together with either your consultants, your finance, or the government, depending on the situation, in figuring out the best outcome, the possible scenarios, and the impact onto your business, rather than, trying to, catch up with the situation as you go along.
Fran, you read my mind. Playing catch up to a situation is never a good idea. Playing catch up to a situation is about letting the situation take control of over your business. What you should be doing is working with the people who are close to you, your own financial controller, your own accountant, your advisors, your technical people, in order to have a good understanding of the situation, in order to have expectations of the situation, in order to identify likely scenarios, and to focus on what are the actions that the business should be taking in order to have a managed process to exit from this crisis.
Fantastic. Fantastic. Thank you very much, Mark. We're now kind of, towards the end of the summary, unless there is something else in particular you would like to add.
I think that this is very much the time when businesses should not panic, and business leaders need to have the strength, to have the faith that there is a future. That future is not necessarily going to be a very short-term future. The short term, even though we will be emerging from this crisis, the short term is likely to be a slow emergence, but there is a future, and it is at our option to plan, to prepare, to be ready to come out and be part of that future.
Fantastic. Thank you very, very much, Mark. And if anyone has any questions, I'd like to remind you that you can do that through Facebook or YouTube comments before we come to an end of the broadcast. And again, just to re-emphasize for our viewers that the points that we've made is to plan, prepare yourself, approach situation with a calm overview in mind, with a solution-oriented approach, and get the information from the right people, from the consultants, from the government branches, for example, Malta Enterprise, for example. Get your information right, and do have faith that businesses have overcame adverse situations before. I mean, if we look back at the crisis in 2008, when I won't name the company, but a very large financial services firm have laid off over 20% of their staff, and then the business recovered. And when it came to the recovery, they found it very difficult then to hire back the individuals that they let go, which was then recognized as perhaps a panic-induced reaction, rather than looking at other possibilities, that the business could have availed themselves of during difficult circumstances. And I'm not saying that, reducing workforce or making certain changes should not happen. There are situations where it is necessary to happen for the overall well-being of a corporate entity and the employees themselves. But before, jumping into measures, I think it would be absolutely ideal for business owners to really take a step back and see what can be done in the likely scenarios that you have described so well, Mark.
Thank you. I am open to any questions.
Okay, I'm not sure if we've got any coming in. We either covered everything very, very well, or there are really no questions. We're going to stay live for another minute or so. So if you do have questions, I do encourage you to, go ahead and, type in so we can assist you. Joanne Falton, thank you very much for your kind words. Well done, very informative and concise. Thank you very much for joining us as well. I would also like to point out, because this has happened to me in the past, that if you would prefer to ask your questions confidentially, for example, you don't want to put them in the live stream for everyone to see for various reasons, you can do so by emailing fran@franmoisa.com, and myself and Mark would be in touch to answer your questions. We will do our best to do that. I think we are off now. I think we've got a comment coming in. So a question from Joanne Falton. Is it wiser to take more loans when the company already has loans and with the expected slow start?
Joanne, obviously advice has to be tailored to the specific circumstances of the company. But one thing I would suggest would be, one can consider whether the existing loans can be restructured, Can one speak to the banks and ask for refinancing of those loans? Can one apply a re-engineering of those loans in order to have a better spread out loan schedule? In taking on more loans when the company already has loans, one has to be very careful about the gearing ratio, which is the burden that total indebtedness is putting on the financials of the company. So yes, there is an important consideration there. I would look at the timing of loan repayments. I would look at the cash flow abilities of the company. Can the company actually sustain loans or more loans? Can something be done to restructure the loans? Can one apply a moratorium on those loans? Can one apply for an interest rate subsidy on those loans? But I would say that a solution to a problem is not just about the financing of the company, but is also about the operations of the company. Is there work that you can do? I presume that people listening to us are more of a financial orientation. I have this belief that the role of the chief financial officer is not just to produce the accounts and to do what we used to call the bean counting. The chief financial officer should be involved in a very broad range of activities within the company, ranging from strategy to operations to support services to re-engineering. Can the chief financial officer drive a look at the operations of the company? Is there an opportunity to increase the profitability of the company? Are there costs that are weighing down the company? Can costs be shaved? Can the company's profitability be improved? Improving the profitability, will that feed through into free cash generation? And if that will feed into free cash generation, then is it possible to sustain a higher level of indebtedness because the business is generating the cash to enable the indebtedness to be paid off?
Thank you, Mark. Joanne, I hope that gave you an overview and an answer to your question. Okay. I don't see any further questions coming in at this point. If you do, like I said, please do type them in the comments, or otherwise you can send an email. And Joanne said yes, thank you. That's great.
Excellent.
Excellent. Everyone, thank you very, very much for joining us today, and absolute special thanks to you, Mark, for sharing your knowledge with us and giving us this great insights that hopefully will assist businesses and professionals during these difficult times.
It's been my pleasure.
Thank you, everyone. Have a great day, and I'll see you all soon. Thank you. Bye-bye.
Thank you, everyone. Bye.